Hey everyone, it is Julie here with TipRanks. Today we're taking a look at two stocks in the healthcare industry that have been picked up by a billionaire investor lately. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at two companies in the healthcare sector that have recently caught the eye of Point72 asset management hedge fund manager Steve Cohen. On top of that, they've also picked up a strong buy consensus from Wall Street analysts. So we're going to take a quick look at these companies, what it is that they do, and what Wall Street analysts are predicting for the stock's future. But just before we get into that, I need to let you know about TipRanks' huge Black Friday sale. It is the biggest sale of the year where you can get 45% off premium investment research tools, including some of our research newsletters as well. So make sure you head over to the TipRanks website to take advantage of that now. Now let's get right into these billionaire stock picks. First on the list today is a company called Crinetics Pharmaceuticals. Their stock trades under the ticker CRNX, currently priced at $30 per share. And as you can see on the chart, a lot of that growth happened just recently. In the last few months, they're up nearly 75%, taking a big jump here at the start of September. Crinetics Pharma focuses on bringing innovative treatments for endocrine diseases and tumors to the market. With their lead candidate, paltusotine, they're developing a once-daily pill that may replace the life-disrupting process of getting an injection every single month or needing to follow a strict daily schedule for short-acting octreotide. Now, in Phase 3, a once-daily oral therapy will be a welcome development for patients and could solve a real market need. And back in September, they did release positive data from that Phase 3 trial, which was the reason behind that huge jump up in stock price. The drug met the primary endpoint in the study, demonstrating strong effectiveness as 83% of acromegaly patients who switched to paltusotine maintained biochemical control of their disease in contrast to just 4% observed with the placebo. The drug also met all secondary endpoints. During the third quarter, Steve Cohen's fund opened a new position in the Crinetics stock, purchasing over 4.2 million shares, currently worth about $122 million. Recently, reinstating a buy rating on the stock was an analyst from JP Morgan. They noted that the paltusotine's chance of success are high, while also noting the strong prospects of the rest of the pipeline and the catalysts ahead. They said that they're optimistic for the upcoming Phase 2 carcinoid syndrome data for paltusotine, as injectable SSAs have shown success in acromegaly can translate to the larger carcinoid opportunity. Altogether, the company has 11 current analyst ratings and does come in as a unanimous strong buy. Those 11 buy ratings come in with an average price target of $46.82, which would be an upside of 53% from current prices, which is pretty impressive considering the growth they've seen recently. Down below, we can see that recent list of price targets here. On the low end, we do have a buy rating with an upside just shy of 9%, the rest all in the double-digit territory, going as high as 88% upside. For our second stock today, we are staying in the healthcare industry, but looking at a different segment with Inspire Medical Systems. They trade under the ticker INSP, currently priced at $140 per share. Now, unlike Crinetics, the stock has actually been seeing a big drop-off lately, down 37% in this past year, including declines of 35% in just the last 3 months. This company focuses on developing devices to help address obstructive sleep apnea, or OSA. This is a sleep disorder characterized by repetitive episodes of complete or partial upper airway obstruction during sleep, leading to disrupted breathing and often accompanied by loud snoring and daytime fatigue. The company has developed the world's first fully implanted neurostimulation device to receive the FDA's nod of approval for treatment of the condition. But despite this FDA-approved treatment, the stock has still been sliding greatly this year, as you saw on the chart. And this is also despite some solid quarterly results. In the last quarter, they saw revenue grow 40% year over year. And a loss per share of 29 cents was much narrower than analysts had been anticipating. The company said that they activated 62 new centers in the U.S. and surpassed 50,000 patients treated with their Inspire therapy. Steve Cohen's fund has seen the recent decline as an opportunity, as in the third quarter they increased their stake by 285%, bringing it to over 880,000 shares, worth over $128 million. A Wall Street analyst from Truist recently weighed in on the stock's pullback. And they think that the recent sell-off creates an attractive opportunity for investors with a 6 to 12-month view as Inspire continues to penetrate the large/undertreated opportunity. They said while weight loss drug concerns remain and the relatively inline third quarter likely was below buy-side expectations, the company is still on track to deliver over 50% fiscal year growth and 30+% next year at least. Inspire Medical Systems currently has 12 analyst ratings, coming in as a strong buy with 10 buys and 2 holds. And their average price target comes in above $231 per share, which would be an upside potential of 65%, so they're hopeful for some recovery there. Down below, we can see all those recent ratings coming from October onwards. On the low end, we do have a hold rating with an upside of 7%, and on a high-end rating, we actually have Piper Sandler here at 156% upside. So there we have 2 stocks in the healthcare industry that look very different right now. One has been on the rise, the other on the decline, but both currently have a strong buy rating from Wall Street and have been picked up by Steve Cohen's fund in the last quarter. Let me know your thoughts on these 2 companies in the comments down below and if either one catches your eye. Of course, keep in mind that any healthcare sector can be more volatile, and these videos are never a suggestion to buy or sell any specific stock, just keeping you up to date with what Wall Street is looking at. So please make sure you're always doing your own research and due diligence and sticking to your own investment plan. Thank you guys so much for watching. I hope you have a great day, and I'll see you back here next time.